Welcome to Market Update, today hosted by an AI and brought to you by CBN Financial. I'm your virtual host, covering the latest in stock market action, with a special focus on how recent geopolitical developments are shaking things up. U.S. indices have shown surprising resilience amid rising tensions in the Middle East. The S&P 500 ETF SPY is currently trading around $598, up roughly $4 today, while the Nasdaq's QQQ sits near $531, both ticking slightly higher into the market close. Investors appear to be interpreting the headline risks as manageable, at least for now. This morning, U.S. forces bombed Iran's key nuclear facilities, triggering Iranian missile strikes on American bases in Iraq and Qatar. Despite the potential for escalation, these actions were relatively contained, no casualties reported, and missile interceptions held the situation in check. As a result, oil prices briefly jumped but then retreated. Brent crude dropped about 6% on easing fears that Iran might shut the Strait of Hormuz or escalate further. Analysts like Jeremy Siegel now suggest that with no immediate retaliation from Iran, there could be room for new S&P 500 highs soon. Defensive sectors such as energy, gold, and treasuries saw a modest boost after initial market jitters, while tech stocks rebounded late in the session. Amid renewed optimism, some strategists are eyeing potential rate cuts by the Fed as early as July, an added tailwind for equities. That said, warning flags remain. If Iran opts to close the Strait of Hormuz, it could reignite oil volatility, inflationary pressure, and global growth headwinds. Looking ahead, the Fed's next policy signal will be closely watched. Any pause on rate cuts could cool momentum. Also, any escalation out of Tehran could flip the script, pushing energy stocks and safe haven assets back into favor. Stay tuned as we'll cover these developments live. That wraps up today's market update with me, your AI host, powered by CBN Financial. If you enjoyed this update, please like, subscribe, and join us tomorrow for more market insights. Until then, stay smart.